Hello, ladies and gentlemen, and welcome to the show. Glad to have you guys here. Today is August 17th, 2019, a Saturday, and we're going to get started. We are going to open up the charts right here and take a look at what's going on in the world. You know, Italy. Italy's a huge problem. It's being described as a nightmare. Debt and doom loops. Brexit, has been hogging the headlines, but the significance of the EU economy pales in comparison with Italy. The anti-Euro party could soon be running the country, which owes the European banks nearly $500 billion of that currency. Can you imagine the debt? How did Italy pile up such a big debt? Well, it was all those years, when basically they extended the euro to Italy using Germany's pocketbook. This is basically what happened. In other words, Germany, picture a guy who's kind of rich and wealthy, and he's in the bar, and he's wearing a suit and tie and everything, and he makes at least six figures a year, and he's got extended, so his buddy comes in, and his buddy is not rich and wealthy. His buddy's dressed sloppy, and his buddy is right? But he says, okay, I'll let my buddy have my tab too, So that night goes by and his buddy is, drinking it up on the house. Everybody drinks on the house and everything, putting it on the other guy's tab. Well, that's what Italy's done. It's basically years. It just put it on our tab, put it on our tab. They went out and they took loans out of the banks in Italy. These loans became non-performing. Thousands and thousands of loans. These banks in Italy are only being supported by the Italian government. And the whole thing is just crumbling like these blocks you see right here. Now, what else is going on? Hong Kong. Hong Kong is spending billions of dollars right now to avert a recession. And protesters are hitting the economy in Hong Kong, hitting it really hard. Hong Kong's pumping billions of dollars into its economy in a bid to avert a recession. Well, you know what? I think it's $2.4 billion, and it ain't going to do it. The world recession's coming in, and this $2.4 billion is not going to stop the recession any more than the interest rate cut in the United States of 25 basis points that we just had. It's just gonna. It says the government announced a stimulus package worth about 19 billion Hong Kong dollars. That's 2.4 billion US dollars on Tuesday to help safeguard jobs and provide relief to people's financial burdens. So it's a nice gesture to try to stop the impending recession that's coming to Hong Kong, but it's not going to work. Hong Kong's going to go into a recession, just like the rest of the world. And as we go through this, you're going to see that this recession is spreading. It's actually going to be a depression, but it's spreading worldwide. Debt collectors in Australia coming down hard. And of course, the interest rates they charge is absolutely unreal. They're coming down hard on the small guy. Now, see this lady here? It says they had a mortgage and several other debts, but it was a $9,600 credit card debt that threatened to undo it all. So she's receiving these letters from them to pay up, And look, you can see her house in the background here. Small little Australian house, So they got financial troubles in Australia, huge financial problems in Australia. Let's move on because we got a lot to cover. Canada is set for a big drop in home prices, according to the news report. Well, yeah, I guess they should be ready for a big drop. This is one of the biggest mega bubbles I've ever seen. Quite literally, you can go in around these large cities like Vancouver, Toronto, cities like Victoria, British Columbia, and the homes are in the millions of dollars. And you'd say, well, that should be a luxury mansion. for millions of dollars. It should be something that has like 20 rooms and 10 baths and. But you go in and take a look at the house. Maybe 2 bedrooms, 1 bath, home. And it's not in that great a shape. And it's like 2.5 million. It's the biggest bubble on earth. Canada real estate bubble. But what makes it worse is the banks have come in. These house prices went up unbelievably high in a very short period of time. The banks have come in and offered the people a line of credit on the value of their home. Well, these people have accepted the line of credit. Low interest rates, and low fees on the line of credit they extend to them. Suddenly they can go out and they can put in a swimming pool. They can add an addition on their home. They can buy themselves a motor coach, a big RV, and they buy 2 new cars and a new truck and everything else on this line of credit. Now all of a sudden this bubble's getting ready to pop. These lines of credit are connected to the banking system. What's going to happen is called non-performing loans, because these lines of credit are going to go bad to the bank. The bank then has that money come back on them, and suddenly we got bank problems. Now on the other side of this, when this line of credit was growing and people were buying stuff, the banks were making loans out to these people. They were recording record profits. So we see what's going to happen here in this bubble. It says right here, the bubble's going to burst sometime. Well, the bubble's getting ready to burst, folks. Let's move on. We got lots to cover. Recession fears grow as the United Kingdom's economy shrinks on the back of Brexit chaos. Well, you know what? If these recession fears are growing now in Great Britain, they're going to get a whole lot worse very soon, folks. And I'm going to tell you why. Because I believe that the hard Brexit is actually coming, and it's going to come and pass. And, the next morning after Great Britain has their hard Brexit and they leave the European Union, the sky's not going to fall. But they're going to start to see some massive inflation in their country. They're going to see a contraction in the economy, and they're going to see the United Kingdom go into a hard recession. Not no soft landing. It's going to be a hard landing into a recession. Now, let's take a look at what else is going on. Markets spiral downwards on fears of a German recession. Slowdowns in China and the United States add to the sense of panic, leading investors to dump shares and buy bonds. We've got trillions and trillions and trillions of dollars worth of negative yielding bonds right now. This means that there's something extremely wrong in the world economy. This means that you have to pay somebody to actually hold your money for you for an extended period of time. This means this defies the laws of money. Entirely defies the laws of money. It also signals a situation that we're in right now that has never existed before. We're in uncharted territory, and guess what? This is going to end very, very badly. It's going to end very, very badly very, very soon. Now let's move on. We got more to cover. China is undergoing a monster slowdown, and it's the second biggest economy on earth. Can you imagine? China's slowdown persists as the industrial economy posts worst growth since February 2002. Industrial production, a measure of China's industrial sectors, including manufacturing and mining, grew just by 4.8% in July. Now, those are Chinese numbers, and Chinese numbers are fudged. I don't think they're growing. I think they're shrinking. That's my personal opinion on it. I think the real numbers are that their economy is actually shrinking now. And that would make sense, especially with the trade wars. Now, I've heard that about something like 1,000 factories I might have those numbers wrong, so don't hold me to those numbers. But I think I heard it's like 1,000 factories in China who are going to move and set up shop someplace else, like set up shop in maybe Indonesia or Taiwan but they're not coming. Mostly they're not coming to the United States. They're going to set up in other places in East Asia. They're going to set up shop, and they're leaving China in droves. What do you think that's going to... it's a few months out yet before this goes reported. But when the reports start coming in of how bad things are getting, we're going to see that this impacts the economy, because China is the second largest economy out there. And so this is going to impact our economy when the numbers come in on what's happening in China right now. Now let's move on. America's corporate earning bubble is hissing air. And this is one big monster of a bubble. And corporate debt. And I'm going to tell you what, the American corporate debt, the stock market now has exceeded the amount that these corporations and stuff earn many times. They've pushed this into a bubble. This is a mega bubble in the United States that's getting ready to pop, including all of the junk bonds and everything else. And you know what? These pension funds and stuff, chasing yield, have been investing in a lot of these products that are subpar, to say the least. When this thing bursts, well, it's going to be devastating. Now, we're going to move on because we got an awful lot to cover here. Deutsche Bank. They're doing this, what they call a revamp. They're actually chopping divisions off, and they're actually laying off like 20,000 employees. The bank is shrinking, basically. And this is a maneuver to stay alive. It's nothing more, nothing less than a maneuver to stay alive. Deutsche Bank's historic revamp is hit by the sagging German economy. So, it says 1 month into Deutsche Bank's boldest restructuring effort yet, the world has turned against Chief Executive Officer Christian Sewing, or at least Germany has. Fears of an economic recession and this specter of ever lower interest rates have taken a toll on all the banks across Europe, and Deutsche Bank's getting hit probably the hardest. If Deutsche Bank goes down, they got a monster of a derivatives book, people. Over $45 trillion derivatives book that has to be made whole if they go down, because those derivatives are going to make their way into the derivatives books of the banks in other places. It's all interconnected, see, into the financial system. It could quite literally bring down the credit markets. Just basically, credit would cease to function. Interbank lending would cease to function. And we could be looking at a credit freeze where if this bank goes down, and it's imminent to go down, and you wouldn't be able to use your ATM machine. It'd basically be a bank holiday. You get up in the morning and you go in to McDonald's to get your favorite sandwich, and you pull up to the drive-in window, and you know how the lady normally hands you that little square blocky looking thing that has a cord attached to it, and you swipe your card across it? Not today. Sorry. What does your Egg McMuffin cost and your coffee and whatever you have for lunch? Does it cost like $7.98 or whatever? Well, you better have the cash in your pocket. I'm telling you guys, this could really happen. Let's take a look now. What do we got? Business Insider. The longer the trade war goes on, the weaker China gets. Could this be the reason why Trump said, okay, Christmas time, we're going to not impose the tariffs until Christmas is over on these newest rounds of tariffs on your laptops and your cell phones? Maybe he realizes that this is getting a little bit out of control and China's sinking too fast, and if China sinks, we're going to sink too. Could that be what's going on? You know? Uh, or maybe he just didn't want to be the Grinch. But anyway, this is what's happening out there right now. China goes down, they'll carry us down with them. You know? What else do we got going on here? Fitch downgrades Argentina debt as default risk grows. Buenos Aires ratings agency Fitch and Standard & Poor's downgraded Argentina's sovereign debt rating on Friday, flagging higher chances of default in the wake of the shock of a primary election result that plunged the country into its latest economic crisis. So Venezuela, and now we're going to take a look at a couple other countries too. That's Argentina. Take a look here, Zimbabwe. Well, you know, Zimbabwe has always been in hyperinflation. No, not always, but I mean they've been in hyperinflation. Pensions have disappeared. Zimbabwe, the country where pensions have disappeared. Could that be our fate? Are all of our pensions just going to disappear? They're hitting the middle class. They're coming after us tooth and nail. They want two classes, rich and poor. Ultra rich, super poor. And that's exactly where this thing is headed. It's going to be hard to maintain your middle class and not become super poor where you're on the street with garbage bags around you to keep you warm. I mean, this is the kind of world we're headed toward. UN, the number of migrant refugees from Venezuela reaches 3 million. Can you imagine 3 million people pouring out of that country trying to go someplace else where things are better, where they don't have to starve? Well, you know what? When the starvation's worldwide, where are you going to go? I mean, they can leave Venezuela and go someplace else where there's food and there's sanitation and there's electricity, you know? And that's what they're doing. They're getting the heck out of Dodge. But where are you going to go when the whole world is in a hyperinflation? And there's food shortages everywhere. It says the exodus driven by violence, hyperinflation, shortages of food amounts to around 1 in 12 of the population getting the heck out of there. That's what's going on in the world. I'll turn off the charts right here and talk to you guys for a second. Honest to Pete, I've never seen so many problems in so many places. And not just small problems in small places, but big problems in big places. It's like the whole world is under problems right now. And the structure of the financial system is the root cause for all of this. And it's because the world's financial system is set up as a Ponzi scheme. It was good in the years when the Ponzi scheme was growing exponentially larger, but now what's happened is we're hitting a wall. In order to keep the Ponzi scheme going now, we have to push it past that wall into uncharted territory that leads us into hyperinflation. And that's the only direction that they can go. They can't let the Ponzi scheme collapse, because if the Ponzi scheme collapses, it'll take the world with it, including all of the rich and everybody. Everybody would lose. So the only direction we can go with this, the controllers out there that control the world's economy, know that they would lose too if they let the Ponzi scheme collapse. They have to keep it going. But we've reached this critical point where if we push it any further, we're going to start to create massive inflation, and then there's going to be a loss of confidence in the purchasing power of the fiat currencies worldwide, and they're going to have something to turn to. There's not many alternatives out there, guys. The dollar's not an alternative. It's a fiat currency. And the loss of confidence is going to be in the fiat currencies. Where do you turn? There's only gold, silver, and cryptocurrencies. These are the only assets that you can buy that are actually free of the world's economic system, and they're in their own little glass house and they're moving their own way, which is up in value. All three of these assets are moving up in value. Soon this is going to increase exponentially. They're going to move up in value exponentially while all of the rest of these other assets move down, and it's going to become obvious. At the point it becomes obvious, then there's going to be a mass exodus into these hard assets. Thank you guys for listening to this weekend report, and we'll catch you guys again very, very soon. And give me a thumbs up, guys. Bye-bye.